This is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Monday. In today's program, I want to discuss how the bears have totally taken over the market and what is really driving this risk off sentiment. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. We've had out the way. Let's get started. So pretty much as we started this morning, the bears have totally dominated the market. And in particular, the euro and sterling has come under an awful lot of spotlight, and I'm going to talk about the reasons for that. Let's start off with the euro. Basically, the gas crisis has once again sent the euro to parity, and in fact, at the moment, is trading just below parity at 0.9971. We'll have a look at the charts in a minute. And the reason for this is because Nord Stream 1, remember that? We talked a lot about that a few weeks ago. Well, Nord Stream 1 pipeline will shut down again at the end of this month for 3 days. 3 days. And don't forget, Europe is gripped with a gas energy crisis at the moment. And Germany, in particular, is really struggling to build up its supplies for the winter. And the question is, will the pipeline come back on? Again, we had that same issue we had several weeks ago when there was all that fear that it won't come back on after 10 days of maintenance. We have that issue once again. And in fact, Bundesbank President Joachim Nagel says that Germany will likely suffer recession over the winter period. He also went on to add that the ECB must keep raising rates. So now on the cards is a potential 60 basis point rate hike by the ECB. And because of all this, European shares are experiencing its worst day in more than a month. Now, I spoke about a Jane Foley early this morning and on Friday. Her prediction was for the euro dollar to fall down to 95. Another analyst has come out with a very doomy perspective on the single currency. Matthew Hornbeck of Morgan Stanley, he believes the euro dollar could possibly fall to 0.97. Let's have a quick look at the euro dollar as it stands at the moment. At the moment, like I say, it's way under parity. It finally broke through that key level we've been looking at. We've been looking at 1.00027, currently trading now at 0.9971. So yes, again, back under parity. We all pretty much expected this to happen at some point. So yes, indeed, under parity again and under extreme pressure. Now, who's going to be right? Is it going to be Matthew or is it going to be Jane? Only time will tell. On another story, another currency, which is under an awful lot of pressure as well. An awful lot of pressure is the sterling. And when I say out this number, you're going to be shocked. 18.6%. 18.6%. What do I mean by that number? Well, Citibank believes that UK inflation could rise to 18.6% in January. We already have a very scary figure at the moment. Inflation is at 10.1%. And the Bank of England believes by October it can go to 13.3%. But Citibank, they predict inflation in the UK to go at 18.6%. This is what they've actually said. Okay, this in a memo. Even with the economy softening, last week's data reaffirmed the continued risk of pass-through the headline inflation into wage and domestic price setting could accelerate. If it gets to 18.6%, which is just absolutely scary, that would break the peak level inflation reached in 1976. And that actually is before I was born. I was born in 78. So that's scary. That is really, really, really scary. And because of this now, and because of all this other economic gloom and stronger greenback, the sterling is trading at the lowest levels since mid-July. So let's have a quick look at the sterling. And then we'll start looking at the rest of the market as well. Because like I said, the bears are completely dominating at the moment. So this is the sterling, currently under that key level, which held it for so long, 1.18172. It's now currently trading under that, and it's currently trading at 1.1774. So yes, both the sterling and the euro are having a very bad day at the office. But it's not just them, it's across the board. Like I say, we have a bear market on our hands completely. If we have a look at the S&P 500. S&P 500 currently trading at 4,162 points. On Friday, it ended its 4-week winning streak. And like I said before, we look on a daily. When we looked at this a couple of weeks ago on another video, we said it touched the 200-day moving average. And since then, the bear market rally does appear to be over. On other things, let's have a quick look at gold as well. Gold is under pressure because of the strong dollar. Yes, it touched that key level of $1,727, which it bounced slightly above, back from again. But again, we are still looking at an awful lot of dollar strength. Bitcoin as well, a risk-on asset. That is under pressure as well. Currently trading at $21,292. So yeah, we have pure risk-off sentiment gripping the market, strong dollar, reality of the euro energy crisis, reality of the cost of living crisis affecting the sterling, and a strong dollar across the board, and a market expecting the Fed to be aggressive with interest rates. So this is what we have gripping the market at this current moment and time. Other news coming up this week, of course, to look out for: German manufacturing PMI starts from tomorrow, EU manufacturing PMI, UK services PMI, US durable goods, US GDP, and of course, the Jackson Hole Symposium, which leads to the big event on Friday of Jerome Powell's speech at 2 p.m. UTC. Will he be hawkish, and will he put the nail in the coffin for the market after that speech? That'd be a key thing to watch. My watch along this week, I will be doing for the US GDP at 12:20 p.m. UTC. Expectation is for it to come in negative 0.8%. Last time it was negative 0.9%. So it should be quite interesting to see how that comes out. So I'm very excited about that. So please come along and join me for that. As well as that, just to mention, we've got a brand new series starting on Wednesday, and that is called #AskJames. This is where I rely on you good people to send in your topics or what you want me to discuss. Like I say, this is a different type of series, a different type of program, that one. That's more educational based, where I answer a topic of your choice. And again, we'll talk about that. So please keep sending your suggestions in. The very first one it was sent in by SMF 790, and that's going to be explaining market jargon. So that should be really, really good. So please join me for that. That's on Wednesday at 12:30 p.m. UTC. As the markets currently stand, like I say, a bad day across the board. FTSE negative 0.15%, DAX negative 2.28%, Eurostock 50 negative 1.71%. So like I said, the bears have totally gripped the market at the moment. Risk off sentiment, all eyes on the Jackson Hole Symposium, all eyes on Jerome Powell's speech. So see what he has to say. Let's see what he has to say. Don't forget, you can ask me questions anytime you wish, because this is a live broadcast after all, and live does mean live. Or just simply say hi if you like, or share me your opinion. What do you think? Do you think that, like I say, the bear market is a bear market rally is definitely over? We're now gripped by the bears. Are we going to see hit the lows of June again? Share me your opinion, because it's an open forum. That's what we're here to discuss. Don't forget, that's always an option. Not to worry, if you think of a question later, and put it in the comment section, either Facebook or YouTube, I will see it and I will reply to it next time I go live on air, which is tomorrow. Just so you know, I'm on the road tomorrow, so I may be doing one broadcast. So I won't be in the studio, but I'll be doing an update probably around about 2 p.m. UTC, maybe a little bit early, that discuss what's happening in the market. So please come and join me there. It will be an outside surrounding, so it'll be a little bit different than my usual program. But on Wednesday, I'll be back on again 3 times. Don't forget, I'll be doing the 8 a.m. and the 2 p.m. plus the special new episode of hashtag Ask James. So do bear that in mind. If there is no questions, not to worry. Not to worry. If you watch me on Facebook and you enjoy this little episode, by all means, give us a follow. If you watch me on YouTube and you enjoyed this little episode, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it useful, give me one of those. It's nice to know that you like what I do. But anyway, till next time, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.